Hi and welcome to this Junior Cycle Higher Level Maths Applied Arithmetic video. In this video we're going to focus on income tax, and as part of that we're going to look at gross pay or income, gross tax, tax credits, tax payables, two tax rates, so how we deal with those questions, PRSI, USC and some graphing. So by law, you're actually required to pay tax on everything you earn, and one of the most common types of tax is income tax. So this is tax you pay on your income, so on your pay. So income tax is calculated as a percentage of your income, and in Ireland our income tax is called PAYE, which stands for pay as you earn. Now if you study business studies as well, this may be something that you are already familiar with. What I find when we're dealing with income tax questions is that it's good to have a specific method. I like using this table, which I'll show you, to make sure that every question is approached the same way. This stops any silly mistakes from happening. If you have a method that you are happy with in either maths or business, I would suggest that you use this same method in both subjects to avoid any confusion. So here is a visual representation of income tax. So we have our gross pay, and gross means the big piece. So this is all the pay that you should get. However, you don't get to keep that all. There is a section which are taken out. So these things are taken out of your income, and these are known as deductions. So income tax is a deduction because it's taken from your wages. It's not a payment. It's not something you go in and pay. Before you get any money from your employer, you have already lost the income tax piece. Your employer will hold on to this and they will pay it directly to the government. Gross pay is your pay before deductions, so it's the bigger amount. And then we have what's called net pay, which is the smaller piece that you get to keep. So net pay is another way of saying take home pay. So the money you get after all the deductions have been made. In Ireland, we use what's called a tax credit system to reduce the amount of tax a person pays. A person is given tax credits for being single, married, widowed, single parent, or a carer, etc. Tax credits reduce the amount of tax you have to pay. To calculate the amount of tax you have to pay, we're going to use this formula. So gross tax. So when we calculate how much tax you should pay, we can call this gross tax. The tax credits are then taken away from it to give us the tax payable. That's the tax you actually have to pay. A great way to think about tax credits is it works like a voucher. Imagine that you have been given a voucher to go against your tax. So if you went into a shop to buy a top and it was €40, but you had a voucher for €10, you only end up paying €30. The same thing happens with tax credits. You have an amount that should be paid, but your tax credit pays part of it. So it always reduces how much tax you have to pay. Gross tax is your tax before you take away the tax credits, and tax payable or net tax is the tax after you take away the tax credits. If you use different vocabulary for gross tax or the tax payable piece, that's absolutely perfect. Use what vocab you are familiar with. I have a little cheat sheet and I will link the document in the description below. I find that applied arithmetic is one section that students really do struggle given the volume of things that you require to know, or the volume of formulae. So here is just a really quick note of what we need to know for income tax. And that is the tax rate means percentage, multiplied by gross income will give gross tax. If you then take that gross tax and subtract your tax credits, you'll get the amount of tax you should pay, which could be tax payable, tax paid, tax due, net tax. I've seen questions across books that use all of these words. Your gross income, take away your deductions, will give net income. For a higher level, we are required to do 2 rates of tax. So there's a standard rate and a higher rate. I love using a table for this. You don't have to. You don't even have to draw it out like a table. You could draw it out in just columns. So here is the table I would suggest you use. It has a standard rate cutoff point, total income minus the standard rate cutoff point. Anywhere those little X's, they will turn into numbers, and then our final number there gives us gross tax. I'll be using that table for you to get a sense of it in the coming examples. So example 1, let's take a really basic example. A printer has a weekly wage of 800. Okay, so I'm going to highlight as I go. So 800 euro. That's what we call gross pay. He pays income tax on all his wages at a standard rate of 20%. And he has tax credits of 48 euro a week. How much income tax does he pay? So I'm going to still use a table just to get us used to it. So he has only one rate, and that is the standard rate, and this is 20%. He earns 800 euro, so the tax is then 20% of 800. Now, you can do this whatever way you like. So 20% of 800. Some people like decimals. I personally like using the percentage button. Of means multiply, so you can go straight to your calculator and type this in. Just one word of warning for anyone using a sharp calculator, you may have to put the percentage at the end. So you might have to do 800 multiplied by 20%. The reason I like this is that if we get decimals in the percentage, so if it was 13.5%, it is a little easier just to work with it rather than convert it to a decimal. So the tax is 160 euro. So this piece here, and I do like to label it as I go, this is what I call gross tax. So how much tax this printer should pay. However, he doesn't have to pay all of that because, I like again to tick off as I use these, he has tax credits. So that is like a voucher. So he has 160 euro he should pay, but he also has this tax credit of 48. So it means he doesn't have to pay the total amount, and we get 112. So we're gross tax, take away tax credits, and that leaves us with what I call tax payable, because that's how much he actually has to pay, and that is how much income tax he pays. So our final answer is 112. If they wanted us to figure out how much money he actually gets to keep, we would then have to take that answer away from 800. Be careful not to do too much or too little in these questions. Really keep an eye on what you're being asked. Example 2. Now let's look at if we have 2 rates of tax. So Sylvia has an annual salary of 42,800. Her tax credit is 3,350. The standard rate cutoff point is 31,000. Her standard rate of income tax is 20% and the higher rate is 40%. Calculate how much income tax she pays for the year. Okay, so the first thing I'm going to do is I'm going to fill in that we have 2 rates. So the 2 rates are known as the standard rate and the higher rate. The standard rate is 20% in this question and the higher rate is 40%. Now, it's important that we understand how we split out the income. So when there are 2 rates of tax, we are usually given what's called a standard rate cutoff point. And we are in this question, that's 31,000. This is the level where up to that, you're allowed to just pay the standard rate, which is the lower rate. So on the first 31,000, she pays 20%. Okay, so that is the standard rate cutoff point. So I'm ticking these off as I go. Now, I like to put in the total income then here, which was 42,800. Okay, so that was Sylvia's total income. Now, I need to figure out what bit of her income is left to get, well, to be charged at the higher rate of tax. So 31,000 plus that blank will give me 42,800. So to figure out what goes in the blank, we're going to do 42,800, take away 31,000, and that leaves us with 11,800. So be really clear how we calculated that. So I'll put it in here, 42,800, take away the 31,000. So now the tax I'm going to work across. We do 20% of 31,000, which is 6,200. We do 40% of 11,800. That gives me 4,720. We add those together and we get 10,920. That gives me gross tax. Okay, so that's my gross tax. So I've used the annual salary. Okay, so does Sylvia have to pay all of that tax? So does she have to pay 10,920? And the answer is no. It can be reduced by using her tax credits. So in this question, her tax credits were 3,350. We take this away because remember, she's always going to pay less tax than she should. The tax credit, it acts like a voucher. So that leaves us 7,570, which represents the income tax she has to pay, which I call tax payable. And that is our answer. Again, if we needed to figure out her actual net salary, we would take the tax bill away from her salary. Let's try another standard and higher tax rate question, but this time we want to find the gross salary. So we're working slightly backwards. When you get a question that's asking you something different, like working back to get gross salary, if you're using this idea of a table, you still approach the question in the same way and work backwards where you can. This is why I love having a table or a layout similar to this. It helps us as we get into the really tough, really tricky higher level questions. Cecile has a tax credit of 3,600 a year, and his standard rate cutoff point is 30,000. The standard rate of income tax is 20% and the higher rate is 35%. If Cecile pays 7,650 in income tax for the year, what is his gross salary? Okay, so like I said, I'm going to approach this like we would approach a normal standard and higher tax rate question. So we have two rates, which are standard and higher. These are 20% and 35%. I always fill in the standard rate cutoff point beside the standard rate. So 30,000 will go here. We then would add in this total gross salary, but that's what we want. So this piece here, and I'm going to highlight it, this is what we're actually looking for. That's the answer to the question. Okay, so I can't do anything there. Okay, nothing I can fill in, but I can fill in the top line of tax. So I can get 20% of 30,000 and that gives me 6,000. I can't fill in the next line because I don't know how much income is there. So then I will add these together and get some number, and that number represents what I call gross tax. I don't know what that is. I'll take away my tax credits, and when I take away my tax credits, I will be left here with tax payable. Now, I do know some of these. So my tax payable is 7,650. So if Cecile pays 7,650, okay. We also have used my tax rates and the standard rate cutoff point. The only other thing we have that we haven't used is 3,600 tax credits. Now that I'm using the exact same layout as I had before, I'm just going to work backwards. So gross tax was some number. I took away 3,600, so I ended up with 7,650. So how do I work out this number? Well, I add 7,650 and 3,600, and this would have then been 11,250. So we're working backwards. Now I keep working backwards. So I had 6,000 plus some number gives me 11,250. So I'll do 11,250, take away 6,000, which gives me 5,250. Okay, so hopefully everyone's with me so far. So we laid it out as normal, filled in what we had, and then began working backwards. So now, this is what I think the trickiest piece is. So I'll do it here, a little bit of green. Okay, so I did 35% of some number and got 5,250. So 35% of some number is 5,250. I want to figure out 100%. Now, the easiest way to do this is, in my opinion, division. So it's 5,250 divided by 35%. Okay, and again, I love using that percentage button. You can work out what 1% is, so divide by 35 and then multiply by 100. But this gives us 15,000 when we do that, which gives us our amount here. And then we can fill that in because now we can add these together to get my total income of 45,000, which is his gross salary. So we've just worked that out. So this is a really good example of how having a really good layout helps with the harder questions. So if you're not using a layout because you're okay with the easier questions where they're just asking us for our tax payable, or if they're asking us for the net income, just really think, how would you then approach this question if you didn't have a good layout? Okay, if you're saying I'm not sure, then I would say consider a good layout. So let's look at another question here. Fergus's salary for the year was 38,500. That's his gross income. There are tax credits of 3,300 and a standard rate cutoff point of 33,800. Standard rate of tax is 20%, higher is 40%. Find his net income. So we haven't seen how to actually do the net income piece yet. Let's see how this goes. So again, we have two rates. We have the standard rate and we have the higher rate. If you want to pause the video now, you can work this through yourself as an example and then just play it to double check that you were correct. So remember, standard rate cutoff point always goes here, 33,800. It should add to the total salary or total gross income, which is 38,500. So to get this number here, we're doing 38,500, take away 33,800, and we get 4,700. Then we work across to get our tax, so 33,800, 20% of that is 6,760. 40% of 4,700 is 1,880. So then when we add those two together, we get 8,640. That represents gross tax, so the tax you should pay. Now, we don't have to pay that all. I'll just tick off some of the stuff I've used. Use my, oh, no, I'm about to use that. So we've used our 32,800, 20%, 40%. So we should pay 8,640. We don't have to pay all of it because we have tax credits. So that means we're going to reduce our tax bill. So we're going to take this away. Remember, it acts like a voucher. So take away 3,300 and we're left with 5,340, which is tax payable. Now, all the questions up to now have been about that. However, this question was find his net income. So to do that, we take the gross income, which was 38,500, and we take away the tax he has to pay, which is 5,340, and that gives us 33,160. I'm going to label this. So this is gross income. We then took away his deductions, which in this question was just the tax. So it's the tax payable, and this gives us net income. And that is the final answer. I'll just put a euro symbol on it. Just a final reminder, be very careful to read the question carefully and to double check what they are asking for. Are you being asked for the tax payable or are you being asked for the net income? Example 5. So this is actually a follow-on question from the example 4 we just did, and it's very similar to an exam question that we saw appear on the actual junior certificate higher level paper. So Fergus's salary for the year, we used all that piece, and now it says, as a result of the pay rise, Fergus's net income increased to 34,780. Find his gross income for the year. Okay. So we know from our previous part, and this is example 4, his old net income was 33,160. So his new net income is 34,780. So this is new net income. So how much has there been an increase of? So an increase of 1,620. Now, we're not going to focus too much on working backwards like we've seen before, because if we think about this question logically, in example 4, there was a standard rate cutoff point, and we have it here, 33,800. Fergus earned 38,500, which means that there was already a portion that he was being charged higher tax at. Now, if he got even more money, okay, so there was a pay rise, so he's getting even more money than this 38,500. So he's getting extra money here. That extra money will have to be taxed at the higher tax rate. And the higher tax rate, which actually is not given because it was given in part I, was 40%. So everything else has already been accounted for. So this extra increase in money, the 1,620, was what he got in his gross income minus the 40% tax. So this is worth 100% minus 40%, so that is 60%, because this is an increase in his net income. You say, well, will tax credits affect it? Well, the tax credits, again, we've already used those, so we're not getting any extra tax. We're not getting any extra tax credits. So all that's going to happen is extra money he gets will just be taxed at 40% because of how much he earns, and the remainder will be left as 60%. So we have 1,620 is 60%. To work out 100%, and you can do this by working out 1% and then 100%, but again, I like the little shortcut of dividing by 60% to get back to it. So 1,620 divided by 60%, and that gives us 2,700. And what that represents is the increase in gross income. Okay, so that's his increase in gross income. So he should, or originally he was earning 38,500. He's now been given an increase of 2,700, which gives a final answer of 41,200, and that is his new gross income for the year. So that is his gross income for the year. So we're taking any extra money. That extra money will have only been subjected to a higher rate of tax, and that's it. So we know what it's worth and we can work off that. Again, if you need to go back over working with percentages, working backwards and so on, I'll link the percentages video in the description below. Example 6, graphing. So an income tax question has been asked on the junior certificate paper, where we were also asked to create a graph. Let's look at this question. The rates and bands for income tax are as follows. We have 95% to 20%, sorry, 35,000 euro at 20%, and the balance at 40%. So what they're doing is they're giving us the standard and the higher rate here. So they've just been a little bit more economical with their words. They've used less words, but we still have our standard and our higher rate, 40%. Instead of saying a standard rate cutoff point, they said 35,000 is taxed at 20% and the balance or remainder is taxed at 40%. They tell us that Lorna has a gross income of 50,000 for the year. Using the rates and bands above, work out her total income tax for the year. So we know the total income is 50,000. We've already accounted for 35,000. So subtracting these two numbers gives us 15,000. And that is the portion of her gross income that is charged at the higher rate of tax. So now let's get 20% of 35,000, which is 7,000 euros. So we're working across. And then 40% of 15,000, which is 6,000. And adding those together, we're getting 13,000 euro. Now, that is her income tax, and we would usually take away tax credits. However, there's been no mention of tax credits. If there were, we would subtract them from that income tax. Part B then, complete the graph on the next page to show the amount of income tax for every gross income up to 60,000 per year. Show all your workings out. Okay, so what we've just worked out was somebody with 50,000. So we've figured this one here, and we've just worked out that it is 13,000. So our point is here. So we can work out at each step, like using what we did in the previous part, to figure out how much income tax each gross income piece will pay. So if, and they've given us this one, 10,000 pays 2,000 in tax. Now, 20,000 doesn't go above the band, so we're going to be taxing that at 20%, which gives us 4,000 in income tax. So there's our dot here. At 30,000, we're still just on one rate. Remember, the second rate kicks in after 35,000. So that's 20%, which gives us 6,000. So I've lost my dot there. 6 30,000 is at 6,000. Now, 40,000 is a little bit different, okay? So 40,000, we have 35,000 at 20%, and then the remaining 5,000 gets taxed at the higher rate of 40%. So what happens, and I'm going to put in a dotted line here, what happens at this point here? Okay, and that's 35,000. That was where the rate changed. So what's going to happen is we have a line going through the 3 blue points, but everything will change when we get to 35,000. So if we worked it out, we'll find that 35,000, there'll be 7,000 in income tax. But when we work out 40,000, we have the 7,000, so that's 35,000 at 20%, and then 5,000 at 40% gives us 2,000, so that gives us 9,000. So I'm going to change. So 40,000 gives us 9,000 in income tax. So you can see that the line that we had going in blue doesn't sit for red. But what actually happens is, where I've drawn the dotted line, we split into another line with a different slope. So this is what it ends up working as. So you should be able to see here that we have a line and then a second line, but both of them just have different slopes. And where that bends is where that dotted line is being shown. 35,000 is where we have a change of lower rate to higher rate. So the amount of income tax is shown for gross incomes up to 10,000. So we've done what they've asked. Part C. This graph does not take tax credits into account. Assume that everyone gets tax credits of €3,000. On the diagram above, draw a graph to show the amount of income tax to be paid for every gross income from 15,000 to 60,000 per year, taking this tax credit into account. Now, there's a very specific reason why they've asked it from 15,000 and not from 0, because nobody who earns less than 15,000 will pay any tax, because if we look at the graph, up to 15,000, which I'll mark in here, they all earn less, well, they all pay less tax than 3,000, so the tax credit will offset all of their tax. So what this means is, and I'll just get rid of this line here, if somebody should pay 3,000 because of the tax credits, now they have no tax. So at all of our points, we can reduce them, and them I mean the income tax, by 3,000. So let's take our main points and come down 3,000 euros. So you can see what's happening here is I'm creating another set of points. So here's 40,000, and then 1, 2, 3, we're coming down 3,000 for each of them. So we're not doing out a whole new set of values, we're reducing each point by 3,000 euro, and specifically the Y value, or in this case the income tax. So then here is the graph when we connect it that shows how much income tax would have to be paid, taking into account the tax credits. Now let's talk about some other deductions you might see. In our questions from the junior certificate exams, we've seen things like pension and other things like union subscriptions which can be deducted. These are generally given as a single amount. Previously, we've been asked to calculate USC, which is Universal Social Charge, and PRSI. For the junior cycle, it's not fully clear if these can be calculated or not, but I would err on the side of making sure you understand how to work with USC for your higher level exam. So for USC, we are given 3 different rates. We'll see a question where we work with this table, but you'll note that this table is very, very similar to the one that we use when we have 2 rates income tax. USC, Universal Social Charge, it's like a tax. It's an additional charge that's placed on your income. PRSI, it stands for Pay-Related Social Insurance, is an insurance that's taken by the government, and this insurance is used to pay for unemployment benefits, pensions, and if you do something like maternity leave. Usually it's about 4% total of salary, so it's just a very simple calculation, 4% of your gross income. Example 7, USC. Last year, Elena had a gross profit of €36,960. She had to pay Universal Social Charge, USC, and income tax on her gross income. The rates and bands of USC are as follows. So the band is up to 10,036. So the first 10,036, you pay 2%. Then any money between 10,036 and 16,016, you pay 4%. And anything above €16,016, you pay 7%. Find the amount of USC that was deducted from Elena's gross income last year. So I'm going to use a table. We have 3 rates, 2%, 4%, and 7%. We need to split up our income so that it adds to a total of 36,960. That was her total income that we were given. We're told that up to, so the first 10,036 is at 2%. The next piece is between 10,036 and 16,016. So we're going to do 16,016, take away 10,036, and that leaves us with 5,980. The last bit tells us that it's above 16,016. So to figure that out, we do 36,960, take away 16,016, and that gives us the remaining 20,944. You could have also worked that out by adding together these two numbers and then taking it away from here. You would have got the same answer. Now to work out our USC, we're going to do 2% of 10,036. Remember, this is money, so 2 decimal places. This is €200 and 72 cents. Then we do 4% of 5,980. This works out as €239 and 20 cents. Then we have 20,944. We want 7% of that, and we end up with €1,466 and 8 cents. We're going to add these 3 numbers together to figure out the total USC, and that gives €1,906, which represents the total USC deducted from Elena's gross income last year.